Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research here at Red Cloud Securities, and I'm delighted to host another Red Cloud webinar on uranium today. We are going to hear from Skyharbour Resources Management, Jordan Trimble, the CEO. During today's webinar, he will provide an overview and outlook, and then we'll take some questions. You can type your questions into the chat box at any time, and we'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During this webinar, forward-looking statements might be made. I would direct listeners to the forward-looking statements outlined on page 2 of Skyharbour's corporate presentation. That can be found on the company's website, skyharbourltd.com. And Skyharbour, of course, being spelled with an O-U-R at the end. So for Red Cloud Securities, I do highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation to buy or sell securities. We note this call does not include the particular situation or needs of individual investors. Participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Skyharbour Resources. Now with that, I turn it over to Jordan to update the audience on the company.
Great. Well, thank you, Dave. Thank you, Red Cloud. Thank you, everyone, for tuning in. It's good to be presenting a corporate update today as we enter into what I think will be the biggest year that we have as a company, certainly from a news flow and catalyst perspective. For those of you that have been following Skyharbour, you know that a lot's gone on over the last 2 years. It's been a transformational 24 months, number of project acquisitions, new partner companies, lots of drilling, lots of news flow, and some pretty significant catalysts. But really, it's kind of all built into what we're going into in 2023, which is a year that will see our largest single drill campaign program, which is about to commence. In fact, we're mobilizing for that right now. It's a 10,000 meter program that'll be primarily focused at our recently optioned Russell Lake project. It's an advanced stage exploration asset that we're optioning from Rio Tinto. We're also going to do a little bit of drilling at our flagship Moore Lake project. Really, those are two co-flagship projects now. But we also have our partner companies as a part of our prospect generator business really ramping up their exploration and drilling efforts this year, having done a fair bit of reconnaissance and exploration in the previous few years. So we're going to see a number of fairly large drill programs and field programs from several of these partner companies. So really, you're looking at somewhere between probably 30 to 40,000 meters of combined drilling between us and our various partner companies across half a dozen projects scattered throughout the Athabasca Basin. As I've said before, we're really looking to build Skyharbour up into a one-stop shop for investors to get high-grade uranium discovery potential across several a diversified asset base, and a good chunk of that drilling and exploration funded by partner companies. So this year is really going to be a pivotal year. We've seen some major discoveries made and announced over the last several years and more recently, including Fission 3.0. So we know the market's paying up for discoveries, and that's why I'm very excited to enter this year with really our most significant drill campaigns that we've ever carried out with us and our partner companies. We're also continuing negotiations on new partner companies as a part of our prospect generator business at some of our other 100% owned projects. And last but not least, I do believe this will be another breakout year for uranium. We saw the price of uranium consolidate towards the end of last year. I think 2023, we're going to see a major breakout, and obviously that'll benefit the uranium equities, including Skyharbour Resources. So they did a good job going through some of the forward-looking statements. Please do read this on your own time. For those of you not familiar with Skyharbour Resources, we are a high-grade uranium exploration and early-stage development company. We've been around for 10 years. We were there in 2013, 2014, 2015 when very few other companies were, as uranium price was quite depressed. Started building the asset base, acquiring projects at pennies on the dollar. So you'll see here, I do like to highlight this. We are now one of the largest land holders in northern Saskatchewan in the Athabasca Basin. We now have 18 projects. You'll see that we've actually been increasing the number of properties through staking and acquisitions. We now have over 460,000 hectares of projects scattered throughout the Athabasca Basin, basically covering every sub-region in the Athabasca Basin. These projects range from earlier stage exploration properties right through to more advanced stage exploration assets. Those being our two core projects of Russell and Moore Lake. These projects host resources and/or high-grade uranium mineralization at a more advanced stage, and those are the projects that we're focusing our time, money, and efforts on, while we look to option our secondary and tertiary projects to strategic partners as a part of our prospect generator business. We've really built up that part of the business over the last several years. We now have 7 partner companies, 2 joint ventures, and 5 earn-in option partners. These option agreements that we've signed with these 7 partner companies now total over $70 million in partner-funded exploration, cash payments, and share issuances coming into Skyharbour, assuming that these companies earn in at these respective projects. So it really helps bolster our main focus and our main value creator, which is drilling at our primary projects. And I'll get into those in the drill plans we have later on in the presentation. So I'll start off with the management team and board. Again, I think some of you or most of you are probably familiar with us, but I run the company. I'm the president and CEO. Started this about just under 10 years ago, partnering up with a geological team in Saskatchewan. I come from an entrepreneurial and finance background. I sat on the CFA Society board here in Vancouver, and I was the corporate development manager for a gold company called Bayfield Ventures prior to running Skyharbour, which we ended up selling to New Gold in 2014. Jim Pettit, the chairman, over 30 years of experience in the mining industry. He ran Bayfield, which we sold to New Gold. Dave Cates, director of the company. So most of you probably know Dave. He's the president and CEO of Denison Mines. Denison's a very large shareholder and strategic partner of Skyharbour Resources. Dave's a very large personal shareholder as well of Skyharbour. A very close working relationship that we maintain, and really have actually grown that relationship here over the last several years. Joe Gallucci joined us as an independent director several years ago. He's the managing director and head of investment banking at Laurentian Bank in Montreal. Brings almost 20 years of experience on the capital market side. So really brings a lot of bench strength in the capital markets side of the business to our team at Skyharbour. Our geological team headed up by Dave Billard. Dave's a 35 plus year exploration geologist focused in the Athabasca Basin. Prior to Skyharbour, he helped run a company, JNR Resources, which was acquired by Denison Mines in 2013. And prior to that, he was a senior geologist at Cameco. He's credited with several discoveries in the Athabasca Basin and really knows these rocks as well as anyone in the Athabasca. Christine McKechnie, who joined us about 7.5, 8 years ago, now a senior project geologist, has worked with Dave and our team in Saskatoon for a while. Christine wrote her thesis. It was an award-winning thesis at the University of Saskatchewan on one of our deposits, the Fraser Lakes Zone B deposit, which is at the Falcon Point project that we've just recently optioned to Tisdale Energy. Rounding out the team, Paul Matizik joined us an advisor back in 2016. Really needs no introduction. He's built and sold half a dozen mining companies. Really at the end of the day, Skyharbour, that's what we're working towards ultimately is the end goal. And then more recently, we announced Andrew Rimcharan joining us as our Senior VP of Corporate Development. Andrew's been in the mining industry for over 20 years. He has a technical background. He was a corporate development manager for IM Gold. And prior to that, he worked at SRK Consulting, where he worked with a number of uranium companies, including Uranium One, Ur-Energy, and Uramin. So a very good mix of technical and geological expertise, focused expertise in the Athabasca Basin, coupled with strong management that has good capital markets experience and managerial experience. The capital structure, pretty straightforward. We trade on the TSX Venture. SYH is the symbol. We've recently uplisted to the OTCQX. SYHBF is the symbol in the US there. 148 million shares issued and outstanding, trade between 38 to 40 cents here recently, about a 55 to 60 million dollar Canadian market cap. We're well funded with over 7 million in the treasury. That covers this 10,000 meter drill program and provides some room for expansion if need be. I will note, as a part of our prospect generator business, we do have approximately 2.5 million that is expected to come in from these option payments in cash and stock over the next 12 months. So well funded, and we do, as I pointed out, have the partner companies funding the lion's share, the bulk of the exploration at some of these other secondary and tertiary projects that we've optioned or JV'd out. Notable and strategic shareholders, management and insiders. A quick note there, we've been continuously purchasing shares. You'll see with my insiders. I really, truly believe this is incredible value proposition right now, given the pullback we saw through the end of last year. I think given the asset base we have and more importantly, the upcoming catalyst, the drilling, the work between us and our partner companies, I do believe we're in for a very good 2023. Denison Mines has been our largest strategic corporate shareholder now for better part of the last 6 years. As I pointed out, a very close working relationship with Dave and the team at Denison, which I'll talk a little bit more about when we get into Russell Lake and Moore Lake. And then more recently, Rio Tinto has joined the shareholder registry as a large shareholder. So two notable corporate strategic shareholders. We are in all three of the North American uranium ETFs, the Sprott ETF, the Global X ETF, and the Horizons ETF, and then some other notable institutional shareholders in uranium-centric funds that have been great partners and loyal shareholders of the company for a number of years now, as we've shifted from more of a retail investor base to more of a corporate and institutional shareholder base in the last several years. I won't spend a lot of time on these few slides. I'm assuming most people listening in are well versed in the uranium market and the nuclear industry, but needless to say, we're incredibly bullish. Three major macro trends that are underpinning this nuclear renaissance or resurgence that we're seeing, including electrification, the need for more electricity generation globally, decarbonization, many countries working towards carbon neutral or net carbon zero objectives, and nuclear has to play an integral role in that. And then more recently, energy security and independence, in particular with everything that's happened in Europe and Russia and Ukraine, the reliance on Eastern uranium and nuclear fuel products for Western nuclear utilities. This market is bifurcating. We're going to start to see we're already starting to see that, but we'll see a continuation of Western utilities having to rely more on Western suppliers, and that's where Western uranium companies stand to benefit. One little quick note here is this note on small modular reactors. We saw the news last year, the Canadian Infrastructure Bank and a $970 million loan to develop the first commercial SMR at the Darlington plant in Ontario. There's talks of what we see in the US, the commercialization development of a number of SMRs over the next 5 to 10 years in the UK as well. I think this is going to be a major part of the growth story for uranium demand and the nuclear industry in the West. We've really seen on a nation by nation basis over the last couple of years, countries that have either been looking to phase out nuclear. Most of them have almost completely reversed their policies, notably Germany and France, even looking to wean off of nuclear, going from 70%, over 70% down to 50%. Now they're really doubling down on that. South Korea, another good example. We've seen countries like China and other parts of the developing world that have really expanded their nuclear plans. And like I said, have really doubled down on their plans. It's the only source of clean, baseload, emissions-free, affordable, scalable, and reliable electricity generation. And so I think this story, this Commodities really been a supply side story over the last 5 or 6 years. I think we're going to see this demand for uranium really ramp up over the coming years as we see these nuclear fleets expanded in a number of countries. Just getting in more into the numbers here. So global demand for electricity slated to grow, expected to grow by 50% by 2040. This is really a growth industry. Uranium demand expected to grow by over 3% between 2020 and 2040. 437 operable reactors, 60 under construction, hundreds more planned and proposed over the coming years. As we know, China really at the forefront of that, planning to build 150 new nuclear power plants over the next 15 years. That's more nuclear power generation coming on in China alone than has come on globally in the last 35 years. You'll see here 2023 expected demand 190 to 195 million pounds in the backdrop of primary mine supply of only about 140 to 145 million pounds. So a major supply deficit. We're simply running out of inventories and secondary supply to meet that supply deficit. We had those secondary supplies over the last 5-6 years, but those are dwindling. We've already seen the market tighten up quite significantly with other parts of the nuclear fuel cycle, in particular conversion and enrichment. We've seen those prices move quite significantly over the last several years. And as we see that work its way upstream, we're going to see that translate as well into higher spot prices and U3O8 prices. Just one last quick note here on the utility uncommitted demand. We're seeing uncovered demand rise very quickly here over the coming years, and with 1.3 billion pounds of contracting needed between now and 2035. And as I pointed out earlier, as we see the market continue to bifurcate, we're going to see these Western utilities have to rely more on Western producers and Western uranium companies. We've already seen the U.S. and the Department of Energy writing checks for $60 uranium. So I think we're going to see that price continue. I think we'll see the price, the spot price and the contract price continue to rise as we work our way through 2023 and 2024. I'll move on here to our projects and our plans. As pointed out, this is a major year for us and our shareholders with some new project acquisitions in the upcoming drilling. So as I pointed out earlier, you'll see this represents Skyharbour's portfolio of assets in the Athabasca Basin, now 18 properties covering over 460,000 hectares. So I pointed out, we really have every part of the basin covered. The northern part, most of the projects, as you'll see in that eastern main mine trend, proximal to mining infrastructure. But we also have projects over on the west side, southwest side, as well as up in the northeastern quadrant as well. So you can think of the projects as two tiers. We have our two main assets, Moore Lake, which for those, again, that have been following the story, it's really been our flagship, been the source of most of our news flow and the focus for most of our drilling over the last 5.5-6 years. We've continued to have success there, in particular, more recently drilling into the basement rocks. I'll talk a bit about our plans there. More recently, though, we've optioned the Russell Lake project from Rio Tinto, and we're just about to commence this inaugural 10,000 meter drill program. I'll talk a bit more about that. The rest of the projects that you see fit into our prospect generator business, and we've managed to now partner up with 7 companies on 7 of these or 8 of these projects. And you'll see at the legend at the top there, 2 joint ventures, one with Orano, France's largest nuclear fuel cycle company, uranium mining company over at our Preston project. They now own 51% of that property. At our East Preston project, Azincourt, which I'll talk a bit about, they're going to be starting a 6,000 meter drill program at the East Preston project here shortly. They now own 70% of the East Preston property. And then we have 5 active earn-in option partners, which I'll talk a little bit about each one and the plans going forward. But as I pointed out, just to summarize, over 70 million now that we've signed in these various option agreements in partner commitments and exploration expenditures, cash payments, and share issuances over the coming years, again, assuming that these companies earn in. So we'll get right into the specifics on our primary projects and the upcoming drilling plans in exploration plans that we have, starting with Russell Lake, as this really will be the focus for us over the coming 12 months. This is a project that we optioned from Rio Tinto last year. We've now received all the permits. We're fully funded for the 10,000 meters that will be commencing here shortly. We'll have news out on that very, very shortly on the specifics of this first phase of the drilling. But just to recap this project, so the option agreement, as you'll see further down in this slide, a very manageable initial 51% earn-in. We paid the cash, we've issued the shares. We have to spend about another just over $4.5 million Canadian. We included in that exploration expenditure requirement is a 10% management fee that we pay essentially to ourselves. So we have another 2.5 years to spend this. So should be no problem getting to that initial 51%. We then do have a pathway to a 70% ownership, and then we can ultimately purchase 100%. So if we have significant exploration success, we make a major discovery, we can essentially buy the project out and own 100% of it. The project is a very, very strategic asset, especially in our portfolio. I've talked about this in previous presentations, but I can't emphasize this point enough. If you look at the location of this property, it's a major land holding, over 73,000 hectares, wedged in between the McArthur River mine just to the north. You'll see the road, the black line that goes up through the project. That's the road that services McArthur River just up to the north. The Key Lake Mill, one of only 2 operating mills in the Athabasca Basin, is just to the south. Our existing or previous flagship project, Moore Lake, adjacent to the east. And I highlight this point, Wheeler River, Denison's flagship project to the west. And you'll see our claims basically encircle Wheeler River to the north, to the east, and a little bit to the south. You'll see a number of these main conductive corridors, these red lines here on the map that basically trend from Denison's project, the Wheeler River project, onto our Russell Lake project. So it's a lot of the same or similar geology that you have at Wheeler that trends onto the Russell Lake project. Most of the initial targets that we're going to be drill testing, in particular in this initial 10,000 meter drill program, will be corridors, conductors that basically extend from Denison's Wheeler River project onto our project. And we'll have this all outlined in a news release upcoming, but 10,000 meters will be multi-phase, starting with an initial 3,000 meter program. 10,000 meters will take us right through into the summer months. Lots of news flow from that 10,000 meters. The initial drill targets that we're going to be testing will be following up on some historical drill results that previous operators, including Rio and Hathor, drilled over the last 20 years. There's several drill holes with multi-percent U308 over skinny widths. And these drill holes were typically drilled in very widely spaced drill fences, some of which were 300 to 400 meters apart. So what it really excited us about coming in to this project and carrying out exploration and drilling was going in and carrying out some more systematic drilling, tightening up the drill spacing. That's worked in a number of other major discoveries in the Athabasca Basin. We think it's going to work for us here. So the first few 1,000 meters and the first few drill holes will be basically following up on some of these historical drill results, in particular at a target area called the Grayling Zone. And this is actually right beside the road, so we can basically drill it all year round. It's also very close to the exploration camp that we've inherited at this project. There's a state-of-the-art 40-person exploration camp that's going to bring down our drill and exploration costs quite significantly, not just at Russell, but also at Moore Lake. So this Grayling Zone, you can see here on the image on the map, this is this series of conductors, basically seeing all the right ingredients. In particular, what we're excited about with the first few thousand meters in the first few holes of drilling is basically an 800-meter long discontinuous zone of uranium mineralization, and you'll see there some high-grade hits, but really it's only been drill tested with very widely spaced drill fences. So we think we can go in there, tighten that up, and hopefully find something higher grade and much larger. But as I pointed out earlier, this is a very large project. There's no lack of targets. There's a handful of other regional targets at the project that we'll be drill testing. You'll see some of these conductors that trend from Denison's Wheeler River project up to the north onto what's called the Fox Lake target area, and some other targets to the south as well that we will drill test later in the program. We announced in December, for those of you following the news flow closely, Condor Consulting is basically carrying out a major data interpretation or reinterpretation and geological modeling of some of these regional targets that will then prioritize these regional targets for us going forward. We really haven't had any previous operators at the project that have done that. So this will really give us, allow us to really kind of go through that major historical data set that we've acquired or inherited with the project, and really prioritize these targets going forward as we look to continue drilling and hopefully making new discoveries at the project. So as you can tell, this is a major development for us, being able to get to the drilling here at this project. Lots gone into the target selection, lots gone into the planning, a lot went into acquiring the project, the permitting, and now we're on the precipice of this first major drill program. Moving on here to our Moore Lake project, really our co-flagship project with Russell Lake. And again, for those of you following Skyharbour, you'll know it well. Moore Lake, a project that we acquired and we own 100% of. We acquired this project in 2016, and we've been actively exploring it really ever since 2017. Several drill programs each and every year. There's the high-grade main Maverick Zone and Maverick East zones that have returned some significantly high-grade mineralization upwards of 21% U3O8 over 1.5 meters, 6% over 6 meters. More recently, we've been having success drilling into the underlying basement rocks at this Maverick corridor, in particular at the Maverick East zone, where last year we announced our highest grade basement hosted mineralization, including 2 meters of just under 7% U3O8. So this is a project about half the size of Russell, so still quite a significantly large land package adjacent to Russell, as I pointed out. We do have plans to continue exploring and drilling at Moore Lake. We'll tie in a few thousand meters of drilling over the coming months and over the next year as we advance Russell Lake. We can access the Maverick Zone via winter roads from the camp that we have at Russell Lake, and this camp is really going to help bring our costs down, as I pointed out, at both projects. There's a lot of smoke on this project. The regional targets, a bit of the recent drilling we've done, we've been drilling some of these regional targets at Moore Lake, and you'll see here there's about a dozen other target areas outside of this 5-kilometer long Maverick corridor that's host to the high-grade Maverick and Maverick East zones. But these other targets at the project have started to yield some really interesting results. Not the high grade that we see at the Maverick corridor yet, but we are starting to see some 0.5%, 0.6%, 0.7% zones of mineralization. And so they definitely warrant additional drilling, as well as continued drilling at the 5-kilometer long Maverick corridor, which has really only been systematically drill tested for about 3 kilometers. So look for additional news flow at Moore Lake as we tie in some drilling with the larger program that we're carrying out at the adjacent Russell Lake project. So moving on to the prospect generator business, this slide really provides a good snapshot of what we've been able to build here as a prospect generator. It's really a secondary part to our business. We don't want to detract from the focus, which is really the drilling and the discovery potential and the exploration and resource expansion at our core projects. But you'll see we now have 7 partner companies, as I pointed out, 2 joint ventures, one with Orano, one with Azincourt, and then 5 earn-in partner companies right now with Valor, Basin, Madero, Yellow Rocks, and Tisdale. Yellow Rocks and Tisdale, 2 new option agreements that we announced late last year. Tisdale, in particular, our largest option deal to date as a company, includes $10.5 million in exploration, $4.6 million in cash payments, and $7 million worth of shares being issued. So in total, you'll see just over $34 million in exploration expenditures, just under $15 million in cash payments, and over $22 million worth of shares being issued to Skyharbour from these partner companies. Now, again, this assumes that these partner companies complete their earnings over the coming years, but it's a significant amount of money being spent in the ground, and it fortifies our treasury with these cash and share payments. It also provides shareholders of Skyharbour with exposure to these other projects and these other partner companies, assuming that they are public companies. Orano, obviously not a public company, so no shares being issued from Orano, but the rest we will have shareholdings in. Just to quickly go over the plans for some of these programs and some of these partner-funded projects. You'll see here, this is the most recent one, as I pointed out, with South Falcon Point. We've optioned a part of the South Falcon Point project. We're calling it the South Falcon East project, optioned it to Tisdale Energy. This does include the Fraser Lakes Zone B deposit, a shallow, lower grade deposit that's open for expansion. That's what we're hoping Tisdale Energy can go in and do. There's also a number of other prospective target areas around the deposit and along strike on that same conductive corridor. But a significant transaction and option deal for Skyharbour. As I pointed out, the terms there, you'll see $10.5 million in exploration expenditures and cash and share payments. We also do have a number of clauses in the agreement that allow us to make sure that we're crystallizing the value in the cash payments and the share payments, as well as having a say in the exploration and the drilling. We truly believe that this project has major upside potential. Obviously, we're focused at Russell and Moore, and so it made a lot of sense for us to bring in a capable partner company to continue the exploration and the work at this project. We will have, and I'm sure Tisdale will have some news out on the specific plans, but we are expecting a drill program at some point. It's drill ready. It's an advanced stage exploration asset. So look out for continued news flow and plans for upcoming drilling at this project later in the year. The Preston project and the East Preston project, again, both under joint ventures. The East Preston project, we have Azincourt as the operator. They've carried out several drill programs over the last several years, and they've made some major progress at the project. I really do believe they're on the verge of a notable discovery. Obviously, the west side of the basin has been quite exciting over the last 12, 13 years with NextGen, with Fission, and more recently with Fission 3.0. It's a part of the basin that's ripe for discovery, and Azincourt is planning a 6,000 meter program over 20 drill holes that'll commence shortly. So as a minority interest holder in the project, Skyharbour will benefit with any exploration success that they have at that project. Hook Lake is currently under option to ASX-listed Valor Resources. You'll see here the terms of that, and there's still a fair bit of exploration expenditures and a little bit of the cash payments that need to be made in order for them to complete their 80% earn-in at this project. You'll see here they completed a small drill program last year, just under 1,800 meters. Some notable initial results there, trying to follow up on some historical high-grade drill or high-grade results, including ground samples that returned upwards of 68% U3O8. The source of that high-grade surface showing is yet to be discovered, and Valor, hopefully this year with some more exploration and drilling, will be able to vector in on where that high-grade massive pitch blende at surface came from. We'll have some news out, I'm sure, in the coming weeks on the plans, specific plans at the Hook Lake project. Murchison, which is just to the east of Hook Lake and Falcon Point, you'll see here under option to Madero Mining, recently new option in late 2021. Madero completed an initial field program in 2022 with plans for additional exploration and drilling later this year. And so you'll see there the earn-in terms, again, pretty straightforward, similar to some of the other projects that we've optioned. The difference with this one, though, is they have an initial 70% earn-in, and then they can purchase the remaining 30%, essentially buying the project out for $15 million in cash and stock. Man Lake is currently under option to Basin Uranium Corp. They completed a first phase of drilling in the summer of last year, and they've just recently completed a second phase. Assays are pending for that program, so look for some news flow on numbers and assays. They've had some pretty notable, I'd say, early success with the drilling at this project, given that it really hadn't had a lot of drilling previously. They're hitting anomalous mineralization, uranium mineralization. They've had some rare earth kicker numbers and kickers as well in those initial few drill holes. And we are expecting additional exploration and drilling in the next 12 months as well. And then last but not least, more recently, an option agreement that we signed with a private Australian company at our Wally and Usam Island uranium projects. These two projects up in the northeastern part of the Athabasca Basin, large properties, lots of conductors, lots of targets, and you'll see the earn-in over a 39-month period here at the bottom, $4.5 million exploration, and issue a total of just over $2 million worth of Yellow Rock shares to Skyharbour. Relatively new earn-in option, still waiting on final details and plans for upcoming exploration programs that they plan to carry out in 2023. This just summarizes some of the recent projects that we've acquired through staking and through other acquisitions that we've made in the last few years. We've really bolstered the portfolio with some new projects scattered throughout the Athabasca Basin, and as I pointed out, 18 properties now covering over 465,000 hectares. So I'll wrap up here, and then I'll hand it over to Dave and anyone that has any questions. So just to summarize upcoming catalysts, as I pointed out when I started the presentation, this is really very much going to be a pivotal year for Skyharbour as we start our largest single drill program that we've ever carried out as a company, 10,000 meters over, which will take us through the summer, right into the summer. I will note it is a program that we can easily expand if we like what we're seeing. Market conditions are there. It's a project, Russell Lake, that is easily accessible with road, with power, with this exploration camp. We're very, very excited to get this initial 10,000 meters of drilling done. We truly believe there is a major discovery to be made at this project, and we think we're going to be successful in doing that. We'll continue drilling at the adjacent Moore Lake project, tied in with the 10,000 meters, and continue drilling at Russell Lake. So look for additional news flow from Moore Lake as well. I pointed out in the past as well, we are working on an initial resource estimate at Moore Lake at the Maverick and Maverick East zones. We do believe, especially with the drilling we did last year and the year before, that there's a lot more mineralization, especially in the basement rocks, to be discovered. But nonetheless, we are planning for an initial resource at some point this year. And then the partner-funded programs. And again, this is really where we've built up this prospect generator business over the last couple of years, and these companies have done a fantastic job getting these projects to drill ready stages, and we are expecting 2023 to be the busiest year in terms of partner funded drilling. As I said earlier, we're looking at between 30 to 40,000 meters of combined drilling between us and our partner companies across half a dozen projects. So lots of potential for discovery across numerous properties throughout the Athabasca Basin. Look for additional new option agreements and joint ventures to be formed. We've certainly seen the market be very receptive and respond positively to these option agreements and new partner companies. And last but not least, uranium market recovery. I'd say it'd be at this point more of the continued continued bull market that we're now seeing. As I said earlier, I really think last year was at the end of last year we saw some consolidation, trading around $50 a pound. I think this year we do see that major breakout in the price, and we have seen the uranium equities. We've seen the Skyharbours of the world trade very well, trade in lockstep with that uranium price. So a lot of good things on the horizon. This is an exciting year for us and our shareholders, and we have a lot of news flow coming out over the coming months with the various projects that'll be getting drilled. So with that, I'll hand it over to Dave and any specific questions that the audience has.
Great. Thank you very much, Jordan. Great presentation as always. Sounds like it's going to be an incredibly busy year here. And I'm not even sure if some of the senior exploration companies are doing as much work as you are. So.
Yeah, no, it's I mean, that's the great thing about having this prospect generator component to the business, and having these companies, be able to raise money over the last few years is they're really going to get a really good kick at the can here with these projects that we've cultivated, we've incubated this portfolio, but we really haven't until now had had companies going in with the kind of budgets and the kind of exploration and drilling plans that the partners have this year and going into next year. So yeah, it very much is an exciting 12 to 24 months coming up for us.
Absolutely. I worked for Franco-Nevada for 6.5 years, so I know all about using other people's money. So anyways, let's get on with it. Start the Q&A session portion of the webinar. A reminder, everybody online, that you can type your questions into the chat box at any time, and we will get to as many as we can. So Jordan, you did speak a little bit about uranium markets and prices, and spot's currently at $50 a pound. Term sales seems to be some of the contracting seems to be done around 60. Do you find that the Skyharbour share price moves in tandem with uranium prices, despite the fact that you're sort of an early stage exploration company?
Yeah, certainly over the last couple of years it has. I think a part of that has to do with the fact that we have been included into several of the ETFs, and we have seen this transition from more predominantly retail investor base, shareholder base, to a little more of an institutional shareholder base, although we still have a very strong retail component. So yes, we are seeing I'd say more of a positive correlation between our share price and the uranium price, which is great. As I pointed out, I think we're in for a very good few years, but as a uranium exploration and early stage development company, we have seen when the uranium price moves, we do get that little bit of extra leverage or torque, and that's an exciting thing for investors coming into the space or looking at the company. Is we do see that little extra juice, if you will, when the price is moving. And then one last thing worth noting, and I highlighted this a couple points in the presentation, but let's not count out a major new discovery. Look at what's happened recently with Fission 3.0, ISO a few years back, and then we can go through the list, including NextGen and Fission, and several other companies that have made discoveries. I think we're in an amazing position right now to offer that potential this year to our shareholders, and the market is paying up for these discoveries. I mean, if you go and you drill and you have a major new high-grade discovery, you are adding a lot of value very quickly in just a few drill holes to your company. And that's what really excites me, and I think also excites a number of our investors, is they're looking forward to that, and hopefully us delivering on that.
Yeah, so that, I want to touch on both those points for a second: discovery potential and ETFs. ETFs are good for investors that want a basket of explorers, but really, what sets you apart here? Why should investors be looking to buy you outside of the ETF, especially when you have 30 to 40 kilometers worth of drilling underway on your property?
Yeah, no, I mean, look, I think that, the simple answer there is, as I pointed out, as an exploration company, you get the benefit of having a little extra torque to rising uranium prices and a rising sector. But also, the ETFs, obviously, we're a small component of the ETFs, right? Most of the ETFs it's the Cameco's, the Next Gens, the SPUTs, right? So it's the larger companies that make up these ETFs. The ETF isn't capable of going out and making a new major discovery or providing company-specific news flow and developments that can generate outsized returns. And that's very much, as an exploration company, that's very much something that we can offer investors that, a lot of the larger companies or other investment vehicles cannot offer.
Okay. So why the Athabasca Basin? You have chosen to work there. Would you consider working anywhere else?
Look, our project portfolio is entirely in the basin, and the Athabasca is the best jurisdiction for uranium exploration, development, and production in the world. Kazakhstan, there's not a lot of public companies operating in Kazakhstan, so you can write that off as far as public companies are concerned. But again, it gets back to the high grade discovery potential, the permitting process, the skilled workforce. You can check off all the boxes, right? I mean, it's the #2 mining district as ranked by the Fraser Institute. There's a reason for that. There's a long history of uranium exploration, development, and mining in the Athabasca Basin. And what really excites us is, and in particular, getting back to our core projects and more recently Russell Lake, recently optioned Russell Lake, is going into projects that have had historical exploration and drilling, but really haven't had any or much modern exploration or work done on them. And we think there's still a lot of value to unlock at these projects, in particular at Russell and Moore Lake, using newer methods, some new thinking, some new geological models, and going in and drilling in areas that previous operators did not drill into. We think there's there's a number of new discoveries. There's a lot of value that we can, again, unlock here with just a little bit of drilling. And so it's not to say that we've looked at projects outside of the Athabasca Basin. There's a number of interesting jurisdictions, but I think from a exploration and discovery potential, the Athabasca Basin really is a cut above, and there really isn't a close second.
Yeah, so with a little bit of drilling, you think you can unlock something, but 30 to 40 kilometers worth across all properties is quite a bit. So how involved are you in developing your partner exploration programs? Do you team up with them? I think your group is probably just as knowledgeable or even better than some partners on some of these projects.
Yeah, no, it's a good question. We stay involved as much as we can be. We typically hand over the operatorship to the partner companies, and with the exception of the South Falcon East project, where Tisdale is the operator, but we do want to have a final say in the exploration programs, and the reason for, we know the geological team very well. We've worked with them in the past, and we're expecting it's going to be a very friendly, amicable relationship in terms of planning the programs. We don't really see there being any issues there, but it is a project that our team has done a lot of work on historically. and we feel like we have a pretty good idea of where the company that's carrying out the work needs to go to make the next discovery or expand the existing resources that are there. So like I said, we do try to be as involved as we can be. We only have so much bandwidth geologically, our team in Saskatoon. So we do have these partner companies kind of oversee all of the contractors and all of the field crews. They typically come with a geological team, and in fact that's an important part of the vetting process for us. Is we want to work with a good technical team or geological team on the other side of the table to really provide a second, third, fourth look at these various projects and really prioritize these targets, pick the drill targets, not just with one group, but with several groups and several geologists. We think that will yield the best chances of making additional discoveries. So the relationships are very friendly between us and our partner companies, and we are involved, but again, they do a lot of the heavy lifting when it comes to actually carrying out the work.
Right. Okay. Now, Russell Lake, you acquired 51% interest from Rio Tinto on this one. What attracted you to this project, and what's going to be your exploration focus this year?
Yeah, I mean, look, we've had our eyes on this project for a couple of years. You and I, Dave, have spoken at length about this, and we were talking with Rio a while ago. We were very much interested in acquiring the project. I talk about the strategic location. That's a key ingredient and a main reason why we were. One of the reasons why we were excited to get the deal done. Obviously, there's the adjacency to Moore Lake. As I pointed out, there's the infrastructure, road, power, the exploration camp at Russell Lake. So it serves us on both projects to bring the cost down, to make it more accessible, to drill year round as well. You've got our largest corporate shareholder, Denison Mines, the Phoenix deposits just a few kilometers from our boundary. So there's obvious potential synergies there. You've got Cameco to the north with McArthur. You got Key Lake to the south. So again, I emphasize the strategic location. And then when we really did a deep dive into the targets, the geology, this is on that main mine trend. It's prime real estate on the eastern side of the Athabasca Basin. It's been explored sporadically over a long period of time. And as I pointed out, even though there has been a fair bit of drilling, there really hasn't been a lot of tightly spaced or systematic drilling. And that's what was one of the things that also very much excited us when we were looking at this was, drill fences that were 300-400 meters apart that were both mineralized, and some of them having, even skinny widths of higher grade mineralization, a geophysical anomaly or an offset at the unconformity in between these two mineralized fences, and little to no drilling in between. And so, we think that this is a project that is ripe for discovery. We think we can deliver that relatively quickly, and hence the reason we spent as long as we did negotiating and acquiring the project from Rio, or optioning the project from Rio. We were very pleased with the deal that we were able to get done with them. I think initially it was more of a cash heavy deal, and we spent a fair bit of time with Rio, and I think they saw the potential in the project, us unlocking more value, making additional discoveries there. So they were more comfortable taking equity and having us fund the exploration and carry out the work. Look, it was really a transformational deal for us as a company. It's a key asset in our portfolio, and now with this 10,000 meters, we're really going to give it a good shot in a relatively short period of time.
And the project's next door to Wheeler, Denison. That is
correct. Yeah, it's right beside Wheeler. It's the property boundary is just a few kilometers from the Phoenix deposit. So you've got a lot of this similar or same geology and conductive corridors that are host to mineralization at Wheeler that trend on to Russell. And so as you can imagine, with our geological team, we're working with Denison and their team, and with, as we pointed out, Condor, to go out there and prioritize these targets at this very large project.
Okay, so you think you might be looking for unconformity Phoenix-like targets as opposed to basin or basement Griffin-like deposits?
Bit of both, right? We're actually going to be drill testing for unconformity and sandstone hosted targets. I mean, look, if we can find a sandstone and unconformity deposit at the project that could potentially be ISR amenable, that'll be very, very exciting, needless to say. But we're also looking in the basement rocks, right? So we're going to be drill testing for both target types.
Yeah. Okay. And Moore Lake, you've got that 5-kilometer long Maverick corridor, still shows high grade potential there, still only maybe half drilled or so. Are you putting that project on the back burner for now, or is this something you mentioned a resource?
No. So we are. I wouldn't say we're putting it on the back burner. We're just focusing more of our efforts in the near term at Russell. A big part of that also has to do with the fact that we've got to complete the earn-in, right? So we've got a window here to spend the money at Russell, and we want to get, at the very least, get that 51% earn-in and get the operatorship and the JV set up. We, depending on results, market conditions, we can look to bump that up to 70 or even to 100 at Russell. But we, as I pointed out, we are going to be intermittently drilling Moore Lake. There's a lot of upside potential left at Moore. We can easily access more with the drilling and the camp and the road that we have at Russell. So look to see additional drilling carried out intermittently as we focus most of the 10,000 meters at Russell, with a little bit of drilling here and there at Moore Lake. Again, following up on some of these recent basement hosted high grade zones at the Maverick corridor, as well as continue drilling at some of the regional targets.
Okay. And some of your new partners are ASX listed companies. Do you find that the Aussies have a newfound interest in the high grade Athabasca projects? Are they willing to pay more than perhaps some of their North American counterparts here?
Yeah, I mean, there's been a notable, two of our partner companies now, Valor Resources, which has been earning in for, we've been a partner with them now for almost 2 years. And then more recently, Yellow Rocks getting their listing, private right now, but they're getting their listing on the ASX as we speak. I'd say there's certainly a lot of capital in Australia that is interested in the Athabasca Basin, that we've seen that really pick up. I'd say comparatively to our Canadian partners and Canadian counterparts, maybe a little bit more investor interest in capital that we're seeing come in. As far as the valuations on the projects and what we're able to option or JV them out for, I'd say it's about the same. These are companies that do their due diligence and they know what they're able to raise and they know what the commitments are. So if there's a deal that's just way too rich, they're likely not going to be able to earn in, and there's obviously that's not good for anyone, right? But notably, I'd say there's been a pickup in investor interest in Australia. We've even seen it in Skyharbour with our shareholder base, and we've had some more recently. We've had some interest from some Australian funds and investors.
Okay, great. So we're almost at the top of the hour. Let's wrap it up with one final question that a few people are asking. What's your cash balance? Will your treasury and incoming option payments cover your own exploration budgets, or are you going to have to go out and raise some money here?
Yeah, so we have 7 million in the treasury. A little bit of that is in stock in some of the other companies, but most of that being in cash. We've got about 2.5 million that is expected to come in from the option payments from the partner companies over the next 12 months. So that, along with our current treasury, covers the 10,000 meters, more than enough to cover the 10,000 meters. And our exploration plans, at least as they stand right now, at Russell and Moore Lake. The partners fund the bulk of the exploration at these other projects. If they're still in the earn-in phase of the option, they pay for all of it. So we're covered. We're in good shape right now. Look, if we like what we're seeing at Russell, and if the market's there, we can look to expand that program at Russell. Very much Russell is going to be, we say 10,000 meters, but it's really going to be a continuous drill program with breaks here and there throughout the year. And so we want to hit it as hard as we can, as quickly as we can, and hopefully deliver that meaningful, large material discovery, not 2 or 3 years down the road, but in the next 12 months.
Okay, great. Jordan from Skyharbour Resources, thank you for talking to me today.
Thank you, Dave.
Thank you, everybody else, for tuning in. Reminder, the Red Cloud Securities will be back tomorrow afternoon. I'm going to sit down with Labrador Uranium. So that's Wednesday, January 18th, 2 p.m. Eastern. Have a great day, everyone. Thank you very much.